All right, everybody, welcome back for another deep dive
Absolutely.
into the car market. Today, we're looking at something that's got everybody talking.
Yeah.
How are independent dealerships handling all the latest changes in financing, and what are buyers actually doing in this market right now?
Right.
So we've got a new report from Dealertrack we're going to unpack, and some insights from our expert, Bert, who, I think you'd agree, seems to have a knack for seeing what's coming next.
He does seem to.
Yeah.
And this time around is so interesting because it's not as simple as like, oh, the market's good or the market's bad. It's like we're watching two different movies playing out at the same time,
Ooh,
depending on who you are.
I like that.
Yeah.
Okay, well, I'm intrigued, so let's get into it.
Yeah.
I took a look at that Dealertrack Credit Availability Index that just dropped, and my first thought was, hey, this is looking pretty good. Like, overall, it seems like credit is loosening up a bit, right? Loan rates are down, and we're seeing those longer loan terms, which, at least on the surface, could mean that monthly payments are feeling a little less scary to some buyers.
Yeah. And you're right. Those trends are definitely there when you look at the big picture.
Okay.
But what's crucial, and what the report really highlights, is that there's a huge contrast between those overall market trends and what's happening specifically with independent dealerships.
Okay, so that's an important distinction to make, and it actually ties in perfectly with what Bert's been saying,
Yes.
because his article really zeroes in on this idea that, sure, credit may be a little easier to come by in general right now,
Yeah.
but for these independent used car dealerships,
Yes.
it's actually getting harder to get financing for their customers.
Right.
And this is a big deal because, we're talking about dealerships that very often work with subprime borrowers
Right.
who really rely on that financing to be able to buy a car.
Exactly. And just to clarify for our listeners, subprime borrowers are essentially those with credit scores that might be a little bit lower, maybe due to, past financial difficulties or a limited credit history. And these borrowers, they often rely on lenders who understand their situation.
Right.
And what Bert is pointing to as a potential crisis is that even though the subprime share of loans is increasing, which shows the demand is there, if the financing options for those borrowers start drying up, particularly for independent dealerships, it's going to make it extremely difficult for them to finalize those deals, even if the buyers are there.
So it's like this weird catch-22, right? Like the buyers are there, they want to buy cars, but the financing may not be there for the independent dealerships to actually make those sales happen.
Exactly.
Something's got to give.
It does seem that way.
Yeah.
It does seem that way.
It'll be interesting to see how that shakes out.
Yes.
And then, on top of that, there's another layer to this whole thing with those longer loan terms that are becoming more and more common.
Yes. Yes.
Bert actually argues that these loans, while they might seem helpful in the short term, could end up causing a lot more problems down the road
Right.
for both borrowers and dealerships.
Yeah.
He even went as far as to compare it to robbing Peter to pay Paul.
Oh, strong words.
So what's the real danger there? Break that down for us a little bit.
Well, I mean, it's understandable, right? You're focused on that monthly payment.
Right.
And for a lot of people who are stretching to buy a car, extending that loan term out, maybe going to 84 months instead of 60,
Right.
it can seem like the only way to make the numbers work.
Totally, especially with car prices being what they are.
Exactly, exactly. But here's the thing. Those longer loan terms really increase the chances of a borrower ending up underwater on their loan.
That's a term we hear a lot, but can you just remind everybody what that actually means?
Oh, absolutely. So basically, imagine you finance a used car.
Okay.
And because of depreciation, which is just, the natural way that a car loses value over time, the amount you still owe on the loan actually ends up being higher than what the car is actually worth.
Right.
So you're underwater because you owe more than it's worth. And that can really trap people in these loans they can't afford, which often leads to defaults. And that can really hurt their credit even more down the road.
Right. So it's like those longer loan terms are kind of just putting a Band-Aid on the problem.
Yes.
Without really fixing anything.
Exactly.
Yeah.
It's not addressing those root causes.
Right.
And for those independent dealerships that we're talking about, the ones that really depend on repeat business and trade-ins, this trend toward those longer loans could have some pretty big consequences.
Oh, how so?
Think about it. If more and more people are underwater on their loans,
Okay.
they're much less likely to be able to trade in their car for something new, right?
Right.
And that, in turn, directly impacts the dealership's inventory
Right.
and their ability to offer more affordable options to other customers.
It's all connected.
It is, yeah. It's this really complex kind of web we're talking about here.
Yeah, so it sounds like it's almost like this perfect storm brewing, right? You've got this financing that's tightening up, longer loan terms becoming even more common.
Right.
And then, to make matters even more interesting, Bert also mentions this whole idea of consumer confidence being a little shaky right now.
Yes. And he's right on the money with that one, too.
Yeah.
I mean, when you look around, it's really a mixed bag of economic signals out there.
Yeah.
Some things look good, but others, they point to a possible downturn. And all this uncertainty makes people think twice or even 3 times about making a big purchase like a car.
Especially with inflation still kind of looming out there and the election coming up, it's like everybody's a little unsure about what's going to happen next.
Absolutely. Absolutely.
Yeah.
And all of those things factor into how consumers behave.
Right.
And for these independent dealerships that are already facing these financing hurdles that we talked about,
Right.
this hesitancy from buyers could translate into even slower sales over the next few months.
So it's not even just about whether someone can get a loan. It's also about whether they feel confident enough in the economy to even take on more debt in the first place.
Exactly.
It's like a double whammy.
It is. Yeah, it's a tough situation.
So knowing all of this, what can these independent dealerships do? How do they not just survive, but actually thrive in this environment? Because Bert seems to think he has a few ideas about that.
He does. And I think his biggest point is that being proactive is absolutely essential.
Right.
Waiting around to see what's going to happen.
Yeah.
That might not be the best strategy here.
Right.
One of his big pieces of advice is for dealerships to diversify their financing options.
Okay.
And to do it sooner rather than later.
Don't put all your eggs in one basket.
That's it.
Right.
The idea is that if they can build those really strong relationships with a variety of different lenders, including some who specialize in, subprime lending,
Right.
they'll be in a much better position to kind of, navigate these choppy waters.
Makes sense.
And then he also talks about the importance of really embracing digital tools as a way to reach a wider audience,
Okay.
especially if people just aren't walking onto the lot as much anymore.
Yeah, it really makes you wonder, if fewer people are physically coming to the dealerships, how do you adapt to that?
And that's exactly where Bert's point about digital tools comes in.
Okay.
He's talking about things like dealerships using more online platforms to find the vehicles in the first place.
Right.
Maybe even buying them at those digital auctions.
Right.
So they're not so reliant on trade-ins anymore.
Right.
And then there's marketing, right?
Right.
Actually reaching potential buyers online
Yeah.
with targeted campaigns that, really address their specific needs and concerns.
Mm-hmm.
He even mentioned virtual showrooms.
Really?
Yeah. Can you imagine browsing for cars from your couch, just like you would shop for anything else online?
I mean, it's like the internet completely changed how we buy, pretty much everything.
Right.
And now it seems like the car industry is finally having to catch up.
Absolutely. And I think that's really Bert's point here.
Yeah.
It's not just about, riding out this current situation.
Right.
It's about using it as a chance to experiment, try new things, be creative, and come out ahead.
So maybe it's less about weathering the storm and more about learning to sail in a different ocean.
Yeah. I like that analogy.
Yeah.
And just learning to sail, it takes a new set of skills and a willingness to adapt.
Right.
But I think what Bert is getting at is that for those dealerships that can do that, there's a real chance, not just to survive, but to really thrive in this, constantly evolving used car market.
This has been a fascinating deep dive.
It has.
Really feels like independent dealerships are at a real turning point right now.
Yes.
But like you said, with the right strategy and a little bit of that pioneering spirit, they can definitely figure out how to navigate these choppy waters and come out on top.
So, listener, it's your turn. What really stood out to you in our conversation today? And if you were calling the shots at an independent dealership right now, what would be your top priorities? We want to hear your thoughts.